apply them within the audit context. So let's get into it. Welcome back to my regular viewers. If you're new to this channel, my name is Amanda. I teach auditing at university and I'm really passionate about audit and accounting as a profession. So let's look at why we use assertions. The first main reason is that assertions are actually our characteristics that we use to tell whether the financial statements are free from material misstatement. I don't know what exactly true could be, so we use the replacement of true and fair of free from material misstatement. And we know that if our account meets the assertions for the transactions or for the balances, then that account is free from material misstatement. It's true and fair. So the way that we can use our assertions in regards to evaluating internal controls is that we can check whether there are controls to meet each of our particular assertions. For example, and we're looking at, say, revenue transactions here, we want to make sure that there is a control to make sure that every transaction really did occur. I want to make sure that there is a control to make sure that each of my transactions is recorded accurately at the correct dollar amount. I also want to make sure that there is a control to make sure that all of my transactions have been recorded in the correct period. So what does the system do in terms of processing transactions to make sure that they're in this financial year? It's processed exactly as it happened so we don't have any cutoff issues. And then classification. What are we doing, or what sort of internal control exists to make sure that the transaction is going to the right debit and credit? The journal entry for that system is set up correctly. So we can use these to evaluate internal controls. List out your internal controls and then see if there's an internal control for every single assertion. If you have an assertion that doesn't have a matching internal control, well then that's a potential weakness in the internal controls, somewhere where a misstatement might filter in either intentionally or accidentally into the financial statements. Remember, we need to collect evidence on all of our assertions. So for my balance sheet items, do they all exist? Have they all been accurately recorded, valued and allocated? Have we recorded all of our assets, liabilities and owners' equity? Have we classified them correctly as current, non-current in the correct spot on the balance sheet? And have we presented and disclosed them appropriately? So no matter what type of substantive testing you're doing, you want to make sure that you're checking off each of the assertions. Now that doesn't mean that we spend equal amounts of time. So in audit, if I've got let's do 5 different assertions here, I don't necessarily spend an equal amount of time on each of my assertions. Instead, I'm going to use risk. I'm going to say which assertion has the most risk and probably apply a greater amount of substantive testing time and effort to that particular area. Some assertions may be less important for some accounts than others. They're at low risk of misstatement. And that means to be able to understand whether it's at lower or higher risk of misstatement for that particular assertion, we need to understand our client. Are the clients expected to overstate or understate their assets or liabilities or revenues and expenses? Knowing the industry and knowing the client will help us understand them better and understand what management behavior might be, what their intention or incentive to manipulate the accounts might be, whether that's overstatement or understatement. So let's look at an example of applying assertions. And I'm going to apply that to a balance sheet item of a particular asset. And let's look at my iPad Pro here for Apple. So we're looking at Apple and we've got our assertions. So if I'm looking at the asset, I need to make sure that with my iPads, I want to make sure, do they exist? If the company says that there are 500 iPads in stock, do we have 500 in the warehouse? So that's the first one, existence. The second one is going to be accuracy, valuation, and allocation. And that really is, for my iPad, well, I've recorded it at my cost price. How that cost calculated? Have I looked into all of the different components, the direct material, the direct labor, the overhead? Is the overhead allocated correctly to come up with an accurate value for one particular item and then all of the iPads in total? Are there any stock that's a previous model that's obsolete that might need to be written off or decreased in its value recorded on the balance sheet? So we've covered existence, we've covered accuracy. I'll do this next one in a different color so that we can see it. I also need to consider completeness, which is really, have I recorded all of the iPads that I have in stock? Now, most of the time you're expecting companies to accidentally or intentionally overstate their inventory and their assets to make their leverage ratios look a bit better, their current and their quick ratios look a bit better. So usually we're looking for, is any inventory there that's not recorded? I might do that by using an analytic. I could do something like, how much raw materials should this have made in terms of product, and do I see that? So completeness, has it all been recorded? Now the next one is going to be rights and obligations. And in reality, here, we're actually more worried about the rights. Do we actually own the iPads? Do we control them to allow them to be recorded on our balance sheet as assets? Obligations comes out more when it comes to liabilities and owner's equity, more so than for assets. And then the final one, which I'll do over here, I just realized I might have written over my head, is presentation. Has all the information about inventory been presented and disclosed in our accounting financial report appropriately? So I'm going to need to look at not just the number, but also management's disclosure in the notes and make sure that meets IFRS, or in Australia, our AASBs. To end this video, I'm going to offer everybody a little interactive activity. I was approached by the tech startup Parampara. They've been working with some universities in creating like a text message style conversation with students to help them test their knowledge, and you can converse with this little chat bot essentially through a link. Now, Parampara haven't paid me at all to test their product. I'm not getting anything from them, but I thought this might be a really interesting tool to use with you, my YouTube community. It's absolutely free to try. There'll be a link in the description. Give it a go. It's going to test you on your knowledge and understanding of assertions with some little questions. It's not very long. It's just a short little test. If you think it's useful, please let me know, because if it does have some use and you do find it valuable, we could build more of these to go with future videos. Now, of course, if you thought the video was useful, I'd always appreciate a thumbs up. If you haven't already considered subscribing, make sure you check out my free audit study guide on the Amanda Loves to Audit website. I've covered the entire audit process with all of my videos and lectures and standards all together in one particular